Good evening, everyone. Sell, sell, and more selling. That was the story on Wall Street today. On this first trading day of February, stocks got slammed. Market pros have been calling for a correction, and it looks like the major market averages edged closer to correction territory today. So what happened? A weak report about manufacturing activity in the U.S. worried investors, adding to the anxiety. China reporting that its factory sector is also not growing much. That was enough to push the major averages down 2% or more in one of the most volatile days in trading in 7 months. Here are the closing numbers on Wall Street. The Dow plunged 326 points. That's a 2% decline. The blue chip average is now down 7% for 2014. The Nasdaq tumbled nearly 107 points, closing below the key 4,000 mark for the first time since December of last year. And the S&P lost 40 points, with all 10 of its sectors in the red. In the bond market, prices rose and yields fell. The yield on the 10-year note dropping below 2.6%. Bob Pisani has more on what stocks and sectors were hit the hardest today and the mood of traders at the New York Stock Exchange.
Stocks sold off today with the Dow closing at a 3.5-month low. The market started to the downside, but then it took another leg down in the late morning when January manufacturing data and the auto sales both came in weaker than expected. Though everybody cited the weather, concerns about a slightly weaker U.S. economy on top of worries about emerging markets left traders in an unforgiving mood. It was an orderly but a broad sell-off, with almost all sectors down 2 to 3%. Even defensive groups like healthcare and consumer staples were down 2%. The volume was very heavy today. It was one of the heaviest days in a year, in fact, suggesting that many professional traders were lightening up on their exposure to stocks. The bottom line, most traders thought bonds would continue to drop and the yields would rise in 2014 and that stocks would move up. So far, that consensus has been completely wrong, but then again, it often is. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Sell-offs, corrections, bear markets. Where does one end and another begin? Why, it's not just a matter of semantics and where you might take cover in today's suddenly volatile market. Dominic Chu has our report.
The stock market has gotten off to a rocky start, and that's got investors worried. This time, many are blaming it on weakness in emerging market countries like Brazil and Russia. Still others are saying it's not just those countries, but bigger developed markets like Japan. Its stock market has already entered a correction, dropping by 10% in value since its recent highs. But is a pullback in stocks really something to be feared? Take a look at the last time we had a pronounced correction for U.S. stocks. It was between April 29th and October 4th of 2011. The S&P 500 lost 18% in that time frame. Among the worst performing stocks were cyclical ones, the ones with the most exposure to the ups and downs of the bigger picture economy. In that last correction, financials, materials, and energy stocks all were hit the hardest. Think banks like Regions Financial and oil companies like Marathon Oil. Conversely, the stocks that weren't as impacted by economic weakness fared better. The so-called defensive stocks, utilities, consumer staples companies, they didn't fall nearly as much. Think Duke Energy and Colgate-Palmolive. After all, we all still use electricity, gas, toothpaste, and paper towels, even if times are tough. Many traders and investors are placing their bets on these kinds of companies depending on what their market view is. But one shouldn't lose too much sleep over the drop in stocks in 2014, at least not according to Bank of America Merrill Lynch.
Corrections aren't that unusual. So, we went back over the last few decades and we found that 5% pullbacks happen on average about 3 times a year. So I think that what we're seeing right now is just kind of a normal phenomenon.
So whatever your view, keep a close eye on cyclical and defensive stocks for where the action's going to be. For Nightly Business Report, I'm Dominic Chu.